A lot of people have been waiting for this video, so let's get straight into it. How to know if price has topped out a bottom. Now I'm gonna explain to you how do I do it in a very short brief. Now the details is gonna be in the private network which I have. Obviously from this video you're gonna get the edge enough to understand what you should be looking for. Now in the bio there's all the links for everything that is free and paid. Go and check them out. I'm not gonna show you anything else. Let's dive into it. Now the introduction. First of all, why spotting tops and bottom is crucial. First of all, knowing when price has topped out or bottomed is gonna give you a much bigger edge. And the overview of the methods are very simple. TPO charts, round number sweeps, delta and volume spikes. That's it. Now, how do you know if you have a good low or good high? First of all, you want price to have a good low or a good high. You need to have an excess on the TPO. So pretty much you don't want to be having a poor low or poor high. You need price to have finished the auction process, and judging by which you need to have an excess, e.g. a good high or good low. The next thing is going to be a round number sweep. So this is an example, 60,000 and 64,000. Now on the first example, $60,000. Now why round numbers work? The reason they work is because as traders, we know most of the time we put our stops on round numbers, 60, 59, 58, etc. Now, when you see a round number being front run, there's 90% probability of price revisiting that place. It's an algorithm, that's the way it's built. Nothing else, nothing so special about it. It's just the algorithm, yeah? So just trust it. It's mathematically built. There's nothing complicated about it. Now, this is the example of $60,000 sweep and 64,000 sweep. That's simple as this. The next thing you want to be looking at is the delta and the volume spike. So this is the same chart, just by adding delta and volume. So down here you can see the 60k, and down here the marked out level is 60k as well. So you can clearly see when you sweep that level, there's an increase in the relative volume, there's decrease in the open interest, so people getting stopped out. Obviously when you're sweeping such a number, obviously you're gonna have a decrease because people stop getting triggered. You don't need open interest about this, but I'm just adding it. And then later on you can see how first when you dive in you get that negative delta spike, and then you get the delta positive spike because price starts to go up and you start squeezing people higher. Now first, in terms of indicator, what you want to see, you need to have a delta and a volume spike, and you just need to combine them with other indicators for higher confidence, e.g. let's say the excess. Now this is an example. This is the whole section, yeah. So look at that sweep of 64,000. So first you see the first high doesn't have a lot of volume, and there's not like a big influx of delta. So delta is not spiking. It's not the same as here. You can clearly see once you move down you had that negative delta spike, then the spike of 60k was lower, and then the sweep of the 60k was even lower. So delta is getting exhausted over here. Now here is a bit different. The first high fronting the 64, no delta spike, no real spike in the relative volume, and the open interest, there's not many people getting stopped out. But then the situation changes. You can see the 64k, a lot of positive delta spike, a lot of volume coming in, and the decrease, people getting stopped out. And then what happens? Price reverts. Now of course you want to be adding high time frame analysis. So this is an example over here, 59k sweep, sorry, 60k sweep, and then you get that 59k sweep, but the 60k sweep is over here. You move up, you come into the daily fair value gap on an imbalance, whatever you want to call it. And that's the 64, and you move down and take out that low. So pretty much you want to be using high time frame analysis as well. And in terms of confluence of signals, again, use TPO excess, delta spike, volume spike, round number sweeps, and this is the way you build the confidence. And then the more signals are getting aligned, you have higher probability for a reversal. Now this is 59k sweep, huge delta spike, huge relative volume, hammer candle, round number, excess on the TPO, full reverse. And this candle over here, the cover one, this is just a cover candle. So in terms of risk management and stop loss, just once you see that, just enter and have your stop loss below that low, and always manage the risk. And after this video, maybe you're gonna go and try to catch every top or every bottom, but I don't suggest you to do that unless you get the experience to do it. So just get the experience, know what you're doing, know what you're looking for, and then try to do it. Now here's the conflict part. How do you know to do it if you haven't done it? Well, just by observing and knowing, and just by experience. So yeah, it's pretty simple at that point. I know it can be a bit complicated, but it's pretty simple if you think about it. Now, the common mistakes to avoid: first of all, you don't want to be relying just on a single indicator such as a round number or a delta spike or a relative volume spike just to get that. Now, you don't want to ignore the market context, so news, sentiment, market structure, narratives, and of course you can be entering too early without confirmation. So let's say over here 68k. So yes, on the first sweep of that round number, you did have relative volume, delta spike, and yes, if your stop loss was above that, you would be profitable. But yes, you do take the first internal liquidity with spike in the volume. You can see spike in volume and cover candles. So this is definitely a signal which you want to be taking profit. But then, of course, the second interaction is not clean. And this is what happens. Once a level has been washed out, you don't want to be relying anymore on it. So once a level is cleaned up, forget about it. So this is the first interaction, clean and nice, and then the second interaction, noisy. This is a common occurrence, and just take notes about it, because this is, as I say, common mistakes to avoid. This is for today's video. If you want to learn more about these things, come in the Discord, check them out, and I wish you a nice day. Thank you for watching this. Wish you all the best, successful trading, and thank you for watching this.